Hi, this is Richard Ansah here from Fiat for Gold. Trust you're having a great day. Want to record just a quick video just to kind of open your eyes if you're new and you're doing a bit of research and you just want to find out what's all the hype about, what's all the excitement about, why is everyone so concerned or bothered about gold or silver, and if you've not even been told anything at all, just to open your eyes. So you can start to make some crucial decisions for yourself and for your family members. Okay, so ultimately, as an introduction, I just want to kind of relay this quote to you, and it says that gold is the standard of all great civilizations. All right, bearing in mind that we operate right now in what we call fiat currency, where the money that we spend is not backed by gold or silver whatsoever. I'm based in the UK. If I was to bring £10, £20 note, £50 note to the Bank of England and ask them to exchange it for silver, or £20 of actual silver, I'd probably get arrested for breach of the peace, because it's not physically backed by gold or silver, even though they promised to pay the bearer the sum of. So what does this all mean? Okay, so and there's another quote I wanted to show you, and I'm going to read it out to you. It says, "Gold and economic freedom are inseparable." Right? In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. Gold stands as the protector of property rights. If one grasps this, one has no difficulty in understanding the statists' antagonism towards the gold standard. All right, and just so you understand what a statist is, I've just taken the liberty of putting down the definition here: an advocate of a political system in which the state has substantial centralized control over social and economic affairs. And I mentioned this is actually quite a key point here, because when you look at this word here, centralized control, okay, that is actually quite a key point, which I might bring up a bit later on. But ultimately, we're in a system that for some reason doesn't want the people to benefit, okay? And things are happening at the moment where you need to position yourself to be able to benefit and to protect yourselves. All right, and I just wanted to share some quotes, basically, just so you know that I couldn't make this up even if we tried, and for you to do your own research. All right, so here's another one. It says, "Like liberty, gold never stays where it's undervalued." Okay, and I put all the references of where these quotes have come from. Okay, next one. "Gold is money and nothing else." And I'm sure you've probably heard of someone called JP Morgan. All right, it's money and nothing else. So those notes in your personal wallet, or those digits that you see on the screen, it's a currency. It's a fiat currency. It's doing its job. But the challenge that we have right now is that every single day, that its ability to buy something and maintain a price, so it's not robbing you of your wealth, that is eliminated. So every single day, the purchasing power of your dollar, your pound, your euro is decreasing, which is effectively robbing from you. But you're not seeing it right now. Maybe you might see it in a year from now when you buy, your weekly shop or monthly shop, and you're thinking, why is everything gone up in price? And we're told, from the press, the advisors, brokers, etc., oh, it's just the cost of living. That's not quite true. All right, it's something called inflation, and it's an effect, unfortunately, because of the fiat currency that we are involved in. Everyone is involved in around the world. Okay, here's another quote I wanted to show you. Okay, in fact, first let me define what money is before I show you the next quote. It says here, coins, or money, as a definition, means either coins or other mechanical devices manufactured in a mint made of gold, silver, or other precious or semi-precious metals to be media of exchange, so a means to be used for money. All right? Okay, that's the definition of money. So here's another quote. "It's a terrible situation when the government, to ensure the national wealth, must go in debt and submit to ruinous interest charges at the hands of men who control the fictitious value of gold. Interest is the invention of Satan." And that's from Thomas Edison himself. All right, he's even mentioned it himself and categorizes interest the national debt is in trillions of dollars at the moment, okay, is the invention of Satan. All right. And again, it's not my words. I've just done a little bit of research, the same as that you can do. Literally, the writing is already on the wall. You know, we've been warned about this. Even Winston Churchill himself says, the further you go back in history, the further forward you can see in the future. All right. Next quote. It says, in effect, there is nothing inherently wrong with fiat money, provided we get perfect authority and godlike intelligence for kings. All right, and I'm going to repeat that. It says, in effect, there is nothing inherently wrong with the fiat money, provided we get perfect authority, which is questionable, and godlike intelligence for kings. And that's Aristotle himself just quoted that. So I don't know what impression this is giving you when you're obviously reading this on the screen and hearing my voice reading out these quotes. It's just to impress upon you that, you know, these are serious times that we're in right now, and you owe it to yourself, to your loved ones, family members, friends, to educate yourself, because this is not the things that are taught in schools. It's not taught anywhere, to be fair, unless you do the research yourself. And unfortunately, unless your frame of reference is open like it is now, because I'm showing this to you, now you're looking, you'll see it everywhere. But before, you know, this kind of information is almost hidden in plain sight. And so I'm really want to make sure that your eyes of understanding are open, so you can literally, and whatever you decide to do, you're going in with your eyes wide open, making an informed choice for yourself. All right, not listening to anybody else or taking someone else's word for it, but you're seeing it with your own eyes. You can do your own research, and within a matter of hours, you can see it for yourself and find out what is going on. All right. What I want to do is just kind of go over a bit of information for you, just so you can have an idea. This is a graph showing the US dollar as an index from between 2002. Let me just go back. Between 2002 and 2007, and it's showing a decline of the dollar in terms of what? This is a graph showing a comparison of the dollar compared to other currencies. The value of the dollar is just decreasing over time, which is an indication of inflation. Because if you just look at the dollar in and of itself, you cannot notice in its own class, you cannot see or notice, or you're not aware of its effects on your wealth. But when you start to compare it against other assets, okay, so this is basically what we call value versus price, almost. Okay, you're trying to see, well, when you're buying something, what's the true value of it? And we're just looking at the dollar for itself at the moment, and you're just comparing it against other fiat currencies, and the value of the dollar, bearing in mind it's the world it's the world currency, okay, is depreciating. All right, have a look at this. So now this is gold priced in dollars. Okay, again, between the same period of time of 2002 and 2007, 2008. And as an asset class, gold in its own right is now appreciating, and this is an asset class valued in dollars. Okay, so you can see as dollars are depreciating against other currencies, so its power, purchasing power is reducing. What's happening to precious metals like gold? Again, gold is not an investment, okay? It doesn't yield any interest. It's just constant. It doesn't change over time. A pound of gold 100 years ago is a pound of gold today. All right, it doesn't change, it doesn't evolve, it doesn't grow, it doesn't fade. Okay, it's an inert metal, which is a natural yellow color. All right, and it just remains over a period of time. It in itself remains constant, so everything around it must change. Okay, so what you're seeing now, that if you're comparing a fiat currency called a dollar, all right, and real money, which I've already quoted to you, called gold, the dollar's depreciating. All the gold will do, sorry, the dollar's depreciating. All the gold will do is remain constant, and reflect its value against whatever you want to reflect it against. In this case, the dollar. And so, therefore, what it can buy, what the dollar can buy for you, is reducing, but gold will maintain real value. And you're seeing here now value in terms of the price of a dollar. Okay, but gold remains the same. And this is for what, an ounce of gold. All right, obviously today's price is much higher. I think is around about the $1,400 mark. Okay, this is just based at between 2002 and 2008 as an indication for you to see what's going on. So now we're going to another approach to look at how inflation is robbing you. It's like a stealth tax. It's like a thief in the night, but you won't realize it until it's too late. And this is exactly what happened in the last crash back in 2007, 2008. Now the Dow is considered, as a index, a stock for industry. It's almost like a basket of different industries, whether it's the tech industry, industrial companies, and it's almost an index of how the US is performing. All right. Now this is again between 1996 and 2008. All right. And so the Dow, in terms of dollars, generally you'd call that a bull market. It's increasing. It's only increasing because the supply of money is increasing. More people can get access to that money, so therefore they're going to be spending more. All right. So you're seeing a general increase over a period of time, measured in dollars. But what would happen if you were to look at the same chart, but rather than measure it in dollars, measure it against a different asset class? Just for today, I'm going to look at it against gold. Now, the same chart is showing a depreciation. Right? It's exactly the same chart, but I'll just divide it by the price of gold as opposed to the dollar itself. Okay, and you can see it's actually reducing in value. So what you could get in 1999 is nowhere near the same value in 2007. So the Dow is really depreciating in real true value when you compare it against another asset class. And you can do this against other asset classes, whether it's property, agriculture, whatever it might be. Just dividing one against the other, you can see that there's actually a depreciation and increase. So you're seeing the true value, not against the dollar itself. So in other words, its power of purchasing is reducing. So wealth is being robbed. It's disappearing out of your pockets, but you don't see that if you're looking at it from the basis of just the dollar itself. You're just seeing, oh, stocks are going higher. Oh, it's increasing. I'm rich. I'm getting more and more wealthy. But in actual fact, your ability to maintain true wealth is reducing by the day. And this is indicated looking at the Dow priced in gold. All right, and I'm just doing this to show you again, so helping you with your research, why owning gold is so important as opposed to hoarding paper, which is only valuable because of the decree of the government. Wherever you are around the world, it's just on the trust of the government why it can do its job. But if it's not backed by anything of substance and literally being printed infinitum, it's going to water down and be reduced to nothing. And we're in a pinnacle time where, historically, when situations like this has happened, there's been catastrophe. All right, and I'm just trying to open your eyes as to what's happening here. Now, this is another chart here. I'm just going to find a pen that's going to be the right color. Looking at historical interest rates. Now, this is a bubble, right? When houses were hitting its peak just before the crash of 2007. Interest rates were going down because inflation was getting higher and higher, and then the bubble popped. Then interest rates increased, okay, which is a deflationary or contraction. Okay, this is what happens when the bubble bursts. So interest rates will go up to stave off the problem here of too much borrowing. But historically, that caused problems. The last time interest rates rose too high to try and stop people from borrowing and stopping the catastrophe, even though the catastrophe took place anyway, was the 1929 crash. People just getting cheap money, easy money, buying stocks left, right and centre. And then before you knew it, it got out of hand. So the government's reaction was, right, let's hike up interest rates to stop people from borrowing and slow down this whole system. But what it caused was complete catastrophe because everyone was in debt. And so everyone couldn't pay back when the interest rates are so high. But so the present monetary group or reform group in the US, England, are saying we can't have a repeat of that, knowing what we're doing at the moment. Plus we're printing more and more money than we ever did in the past. So let's try and keep interest rates low. Let's try and allow the public to think that everything's okay, using the media and keeping everyone blind and ignorant to what's really going on. All right. And then because money's so cheap, then businesses can still survive just about. People can get things really cheap because money's really cheap, can borrow because things are just super cheap. Everyone can get hold of it ultimately. And so more and more people borrowing for money that's next to nothing. Look at interest rates are negative here. All right. It's going to cause a catastrophe. So now we're in a situation, this is between 2012 and 2018. It's not just the house that's in the bubble. It's all the asset classes in the bubble. And they call it the everything bubble. Do the research yourself. Okay. Here's another example of interest rates being super low. Over history. So from the period of 2009 to say 2016, interest rates were super low. These grey periods here was the last times of recession. So the 2007-2008 recession, when it finished end of 2009, okay, interest rates were next to nothing. Okay, then it started to grow a little bit, between 1.5%, and it's gone back down, or there's rumours of it going back down to negative. And this is now looking at the bond rates, both private bonds and government bonds. So in the red is a representation of private bonds. Okay, coupon rates have never been so low. I read an article only yesterday about both government and private bonds are now in negative territory, which is a serious indication of another recession. Okay, here Treasury bond, 10-year Treasury bond. Bonds are, supposedly considered to be safe, a guaranteed income. You're lending money to an institution for a rate of return over a period of time, but yet still now the return that they promise you can't even get back because interest rates are so low. This is a danger zone. All right, and again, this is now showing the S&P. All right, and how people, again, this is just another index. Looking at it over time, 1997, we were in a bull run. Then there's a bit of a recession here. Okay, there's a dip. Obviously, we know the market works in cycles. Then there's another run, but you notice it was roughly around about this level. Was that say 1600? All right. The financial crash took place just at the end of 2007, and it was around about 1600, approximately. But now we've seen significant gains, and this is a magnitude of 2,700. It's significantly higher, nearly over 1,000. The index, there's 1,000 difference. Okay, I've not measured in percentage, but it's a significant percentage difference. It says here a 300% gain. Okay, imagine the devastation when this bubble bursts. Here was the last recession, and that was bad enough. This is just after 2018 of the data and how accurate and relevant this data is. So it's just to show you, again, for your research, that you don't have to suffer in ignorance. Okay, this any problem really can be converted into a solution, and you can look at the bright side. Normally, it's the big money that's waiting for this to happen, so they can capitalize and benefit from a wealth transfer. Why, with this knowledge that you have access to, why can't you do the same and benefit from a wealth transfer? Unfortunately, the majority of the population have no idea about this. They're just living their life daily, being stressed about trying to get through to the next day, maybe trying to get their favorite TV program to relax and escape from life. But it doesn't have to be you. All right, so educate yourself with real financial education. That's why I've called this next level financial literacy. Get yourself equipped, and if you're interested in finding out more, then I'm sure either under this video there's a link around here for you to get more information. Okay, so you can find out what you can do to tap into, I'll call, an opportunity here, and protect yourself at the same time. Okay, now this is just a slide here showing you the effects of hyperinflation. I'm going to do another training about this, but this is the time of World War One. Let me change the color of my pen. All right, World War One, and this is Weimar Republic, Germany. They decided that they were going to basically win the war. They guaranteed they reckoned they were going to win the war, and they were going to do anything that it took to win it. So they decided to take themselves off a gold standard and print infinitum. Okay, so when the war ended, 1914, they were just continuing as normal. People went back to work once the armistice took place. However, there was reparations. Okay, they had to pay for the damage that they caused. And once that was decided, they had a certain time to make that happen. However, because they were printing more and more money, as you can see, the rest of the world didn't trust their currency because it wasn't backed by gold. So, in other words, the world wanted payment in another currency, not in the mark. So they were just printing themselves, trying to print themselves out of debt. It wasn't happening. So ultimately, because of lack of trust, the value of their mark shot up to absolutely nothing. And that's the definition of hyperinflation. So they were burning the money just to keep warm, but no one would trust it to spend it. Now, that caused significant devastation for that nation. It took a long time for them to recover. That could be another scenario that will happen in our lifetime. There's been many hyperinflations around the world, and again, I'm going to do another separate training on this. But what do you think this means to you? 1914 to 1923, nearly 10 years. So I want to give some closing thoughts here for you to really think about and make your next decisions wisely as to what you feel you need to do, whether you're going to go and do more research. Don't take my word for it, okay? Or find out what the next steps are so you can do something to protect yourself, your loved ones, and your friends, yeah? So this is one of my favorite quotes. It says here, our mind is of three categories, all right? What we know, what we don't know, and what we don't know that we don't know, which is complete ignorance, which is not bliss. Ignorance is actually very expensive. What we don't know that we don't know. So he says not knowing is unfortunate, but not knowing that you don't know anything is absolutely tragic. Don't get caught out. Yeah, and the reason why I'm teaching this is because I don't want people to make the same mistakes that I did 10 years ago. That's why I'm very passionate about this subject. And education, financial education, is absolutely key. All right? Another quote for you. The ultimate Ignorance is the rejection of something you know nothing about and you refuse to investigate. And why this is so profound for me, because when I talk to people about gold, they look at me with a blank stare, like, Richard, you're mad. Gold is, what do you mean gold? No one ever talks about gold. You need stocks and shares. Yeah, no one makes money from gold. All right, and now we're in the realm of the millennial. I kind of hesitate to think what that means now, but we can change that with knowledge. Okay, wisdom is knowing what to do when you don't know what to do. I love that definition of wisdom. All right, but my favorite book says, get wisdom, get understanding. Go and get it, find it out. But if you are refusing to investigate something you have no idea about, and you reject it without first investigating it, another saying is to know and do nothing is the same as not knowing at all. So what are you going to do now that you've heard this? All right, so doubt is an incitement to research, and research is the path to true knowledge. But what does this word incitement mean? Because it's significant. The action of provoking unlawful behavior or urging someone to behave unlawfully. So let's go back to that. So doubt is an incitement. In other words, you are killing yourself if you fail to research and do more investigation, if you fail to educate yourself, to protect yourself, if you just continue to depend on mainstream media and listening to your friends rather than figuring it out for yourself. And maybe for a while be the laughingstock of your mates. Be the contrarian, because the majority don't believe you because they don't want to do the research themselves. They wait till it's too late. Is it worth it? Okay, so that's it from me. What I would ask you to do is, again, do your own research. If you want to find out more, I have links underneath this video or somewhere on this page that you're watching where you can get further information to find out what you can now do to protect yourself and get even more knowledge and get even more wisdom about money and about financial education. All right, there's no excuse. So thanks for your time. This is Richard Ansah from Fiat for Gold. Cheers.